Hello investors, my name is Ujjawal and welcome to yet another sector analysis video by WealthCulture. Today we are going to evaluate the paper industry in great detail post our analysis of the cement industry. So if you haven't watched the cement industry video, please go back and watch. In this video, we will get into the details of the paper sector. We'll understand the industry, the dynamics, various factors affecting this industry, how to deal with the valuation and how to play the whole cyclical theme, as in how to enter this industry at the right time and then exit the right time. Now, obviously, we cannot exactly time it at the bottom and the peak, but then we'll be more or less there in terms of our thought process, and we'll get better at it as we go through more and more cycles, right? So do subscribe the channel if you haven't already. We will be doing more such videos going forward that will help you understand these sectors and decide for yourself what to participate in and what to avoid as an investor. So moving forward, the Indian paper industry is again a very cyclical industry, and it's a boring business, but then you can make a lot of money in a boring business if you can understand these cycles well. It is, by the way, one of the fastest growing markets globally, and this is expected to grow at about 6 to 7% to reach about 30 million tons by FY27. And this is the fastest globally. If one has to take a global view in the paper industry, then everybody would want to participate in the Indian market because it is the fastest growing paper market globally. The second point is that our per capita consumption is only about 13 kgs, whereas some of these mature developed economies like Germany and USA are somewhere closer to 200 to 250 odd kgs per annum. So that's the level of difference in the per capita consumption. And we are a country with 15% of the world population, but only about 5% of the paper produced in the world. So all of these factors sort of align together, and it sort of starts making sense as to why we as a economy, we as a country, is the fastest growing paper market globally. Now, what are the segments within this paper industry that are faster than the others, right? So if you look at the right table here, we have newsprints, we have writing and printing paper, then we have paper boards, then we have industrial paper, tissue paper, specialty paper, right? These are different segments of paper. And as you can see here, we should be looking at two numbers here. One is the volume number and other is the projected CAGR number. So the volume number will tell you about the opportunity size, and the CAGR will also tell you about what is the growth that we are seeing within those sectors. So as you can see here, writing and printing paper, which is mostly textbooks, copier paper, that sort of segment is growing at about 3.7% to 4% annually, right? And the fastest growing segment, which is the double-digit growing segment with a certain respectable size and volume, is the paperboard segment, and that is majorly contributed by e-commerce and the whole transition from single-use plastics to papers, right? That is sort of a long-term value migration theme, you can say, within the paper industry that is sort of driving this demand. And there's a decent amount of volume, so about 3.2 million tons, and this is FY17 number. But then this is expected to grow at about 12.9 to 13-14% as well going forward. So this is one segment that is very interesting within the paper industry, which is actually growing at double digits. The third is the industrial paper segment and the craft paper segment, which again is growing at about 9%, and this is again a sizable segment with 4.8, or I think it should be now 5 million tons or so. And the last segment that I want to talk about is the tissue papers. Now this is a very small segment; it's only about 0.1 million tons, but the growth rate is the highest at 15.5%. So I would sort of restrict my analysis to the growing sectors because the other sectors are not really that fast growing, or maybe degrowing as well, and hence not of really interest as an investor. I would sort of focus on the writing and the printing segment and the paperboard segment, the packaging segment, which is growing in double digits. As you can see here, these are numbers for TCPL Packaging, which has seen tremendous growth because of the packaging segment, because of the growth in packaging segment. And similarly, you can see JK Paper has also benefited, so higher demand for packaging boards from e-commerce, specialty papers to drive significant growth for JK paper. So a lot of these paper companies are actually, which are especially focused on the right segments, are seeing growth, right? So it's not really that boring a segment as one would think it is. Now, let us talk about some of the basic characteristics of this industry. The paper industry, again, is a commodity industry. So there's no differentiation in the product. Everything boils down to the pricing. And because of that, there is intense competition in this industry. There's very little pricing power and intense competition in this industry. And this requires manufacturers to be very efficient in terms of their operations, in terms of their cost, to be as profitable as possible, because the whole focus is on selling the cheapest paper in the market. And if you can be a low cost provider, then you can make decent margins versus other players. This industry is also very cyclical, just like the cement industry. And the cyclicality comes from two factors. One is the dependence of this industry on the general GDP growth. And again, we see phases when the GDP growth goes up, and then we also see phases when the GDP growth comes down. So because of these factors, the paper industry is also cyclical. The other reason is, which I think is a bigger reason, is the demand supply mismatch. So what happens is every 6 to 7 years, the industry goes through a expansion cycle, because of which the capacity increases, the utilization levels fall down, and there is intense price competition. And businesses that are not that efficient in terms of their costs, they get into losses, and then they have to wind down operations, and all of these things happen, and then the cycle turns again, and this keeps repeating again and again. And for these reasons, the paper industry is very, very cyclical. And that, I think, is a common trait across all the commodity industries. Wherever these industries will generally be very price sensitive, they will have intense competition, they will be cyclical, and hence, as investors, we have to be very smart about how we go about investing in these sectors. There are very few sectors actually which show secular growth, and those sectors need to be part of your core portfolio. While some sectors, you have to keep them as satellite stocks, because you need to play the cycle game here. If your understanding is right. Now this is not very easy to do. One needs very deeper understanding of these cycles. So take your call, understand these cycles well, and then jump into these cycles, because otherwise, if your assessment is wrong and you're not able to exit at the right point of time, then it may so happen that you can get stuck in these companies for a very, very long period of time. And trust me, some of the people I know, they have been through this process, and at some point of time, they just decided to cut down their losses. You see, in some cases, the wait can be as long as 4 to 5 years, right? So you have to be sort of very, very cautious. Now, let us look at one such cycle, and this is from our recent history within the paper industry. So as you can see here, till FY10, the utilization levels, the average level utilization levels in the industry were fairly high at about 100%, and in some cases also getting to 106%, 103%. And then what happened is that between the period of FY09 to FY11, there was significant capacity addition of about 1.6 million metric tons. And what this did was increase the capacity of the industry by about 15%. Now it so happened that after the capacity expansion, the utilization levels fell down sharply from about 100% on an average to 82%. Right, and this industry is so sensitive to utilization levels. The profitability sort of is so much aligned with the utilization levels that a lot of companies started seeing their profitability go down, because if the utilization levels go down, then people start to cut down on pricing to push the product in the market. Otherwise, they keep on holding a lot of inventory, which again is also a problem. And then it took good 6-7 years for the industry to absorb that capacity and get back to 95-96% utilization, as you can see here in this chart. So that sort of explains the whole demand supply situation, which significantly affects the boom and bust cycles in the paper industry. So if you are seeing a situation where a lot of industry players are going about doing expansion, and there is significant expansion that is about to come up, then that in a way is a negative sign for the industry, because then you will start seeing the utilization levels go down, and a lot of companies that are not that efficient in terms of their capital allocation, in terms of their cost, will start seeing their profitability go down. In fact, the entire industry will see the profitability going down, but some of these companies that are on the edge will actually see their operations wind down. And just to give you more flavor, what happened in this cycle is that a lot of these companies expanded capacity without securing their raw material, right? So when you start expanding capacity without securing raw materials like pulp and water, then the raw material prices start going up. So what is happening is that on the one side, you are forced to reduce your selling price, but on the other side, you are also paying high raw material prices. And that sort of led to the whole profitability of the industry going down. And a lot of companies that were on the edge actually had to wind down their operation, right? And I think a lot of the big players have learned from this. And from the con calls, one can make out that going forward, companies are very, very conservative on their expansion strategy, and especially if they are going about expanding, then they first make sure that they have the necessary raw material available to basically help them keep their costs low while they expand their capacity, because the pricing will definitely see some sort of pressure. The only saving is that you can at least control your costs on the cost side, so that your margins don't tank down significantly, right? That's the whole sort of learning that the industry also went through. So the paper industry has two different types of players. One set of players are wood focused in terms of their raw materials, and the other set of players use non-wood raw materials. For example, they use waste paper, or they even use agro residues, right? And as you can see, majority of these companies are non-wood based in terms of their raw material consumption. Only about 25% of the raw material is proper wood pulp. Okay. And we will look at the dynamics of both of these two industries, but it is significantly different, which is why there are two different associations that represent these companies. So for example, the wood based paper mills is represented by the Indian Paper Manufacturers Association, whereas the non-wood based paper mills is represented by Indian Agro and Recycled Paper Mills Association. So there are two different bodies that are representing these two different businesses, although they are part of the same paper industry. Now, this is a broad summary of how these two businesses are different, and we will sort of discuss them in detail in the subsequent sections. But basically, wood-based paper mills are generally, in terms of their size, they are much bigger. So they are upwards of 3 lakh tons per annum capacity, whereas the non-wood-based paper mills can be anywhere from 5,000 metric tons per annum to 3 lakh metric tons per annum, or could be even lower in terms of agro, if they are using agro residues as their raw materials, right? In terms of just the concentration, in the wood side, in the wood-based paper mill section, about 10 players control the entire production, right? So that's a very concentrated industry. Whereas on the non-wood side, there are many smaller players, more than 800 players, little barrier to entry here. As far as the capital intensiveness goes, the wood-based paper mills are very capital intensive. You generally have to have a lot of economies of scale. There's a lot of capex requirement to set up these manufacturing plants. And then along with that, you also have to make sure that your raw material, water supply, power consumption is sort of kept under watch. So you have to make sure that your raw materials are secured when you go about doing such expansions or increasing manufacturing capacities. And that also is important because you need to keep your costs under control because you are such a capital intensive business. And also this business itself is very price sensitive. So as we discussed, this is a commodity play with huge economies of scale. And there is a lot of capital required. On the other side, which is the non-wood based paper mills, this is, these are many smaller players, less capital intensive, less barrier to entry. You can always go and buy raw materials. But again, there's a lot of competition here, right? So competition is there in both of these segments. It's just that, these two are different size and scale, different in terms of, concentration of players, and different in terms of the capital intensity that is required to run both of these businesses. Now, on the wood-based side, we haven't seen a new player come because there's a lot of, first of all, capital requirement. There's a lot of environmental scrutiny that also goes into granting a license to set up a new manufacturing facility, which sort of makes it very difficult for new players to come into this line of business. Whereas on the non-wood side, because of the low barrier to entry, more and more players can come, and the more and players also sort of leave the industry as well. So there's a lot of churn in the non-wood side, whereas not so much on the wood-based side. And just in terms of barriers to entry, very difficult to come up with a new wood-based paper mill versus a non-wood-based paper mill, right? So that's different. That's the difference between these two paper sub-segments, so to say. Now, this is a list for your review. As you can see, these are the top 10, 12 players. And the most interesting thing that you will see here is that all of these 10, 12 top players, they have secured their pulp as a raw material. So all of them have secured their raw materials in terms of pulp and captive power also. So they've made sure that they have captive power capacity so that they can control their power costs. Otherwise, if you go smaller and smaller, then it's practically difficult for you to have your own secured captive power facility. So which means you have to rely on the grid, which means it is slightly more expensive. If you combine both of these industries, then obviously it will look like there are more than 750 mills, of course, of different sizes, and the top three players only control about 9% of the market share. So in that sense, Indian market is still a very fragmented market. Versus if you look at on the right side chart, for example, the share of the top three players in US is about 68%. In Indonesia, it's about 72%, and in China, it's still 21%. Versus we are only at 9%. So that means that more and more consolidation will happen in this industry. A lot of players who are not that great in terms of their efficiency, in terms of their cost of operations, will ultimately get bought by the larger players. And that's how more and more consolidation will happen in this industry. Now, there is a significant threat of competition from the imports as well. So mind you, India is the fastest growing paper industry globally. So a lot of paper players in Japan, for example, US, for example, Indonesia, for example, would want to take interest in the Indian market also. Because just because of the growth rate of this market, they would want to come and participate in the Indian market. And what has happened is import duties have declined. And the threat of imports has increased consistently over the last couple of years, as you can see here. So if you look at the red, line, you can see that imports have consistently increased right from 2011 until 2019-20. So in turn, what tends to happen is these large integrated plants that can keep all of their costs under control. These are the ones that tend to survive and grow during a bad cycle, and especially flourish during a good cycle. Over the last 2 years, I think that is the contribution, especially from COVID, because of COVID, a lot of supply chain issues. So international flow of paper into India reduced, and then Indian players sort of took advantage of that situation, and they did well. There was good demand, and because of that, they also saw pricing go up. In fact, they were able to pass on price increases, even though we saw significant increase in basic increase of raw materials. For example, coal price increased significantly. We did see margins going up for these paper companies because they were able to pass on these price increases to the end customer, just because there was enough demand out there. Ultimately, it's demand supply mismatch which decides the pricing and ultimately the margins. So that's again another risk that you need to keep in mind. There is one more issue which is relating to environment, and that is one of the biggest issues when you are thinking about setting up a new paper mill, is the cost of environmental clearance. It's a very big issue, which is why on the wood paper side, we haven't seen any new player come for a very long period of time, because you don't get those licenses easily. As you can see here, Central Pollution Control Board has, which is the advising body of the government, they have classified pulp and paper in the red category, which means the environmental clearance for such new factories will be very, very strict. And then paper industry is also an industry that uses a lot of water, first of all, and it pollutes the water significantly. So, which is why getting license and complying to the environmental regulations is also very expensive. So ultimately, all of this comes down as a cost, and only large players with great economies of scale are only able to handle these costs when it comes to environmental compliance. So the capacity is only being expanded by the current players. So in that context, this is very important, because if you look at the industry and you say 4-5% growth is not a lot of growth, but then you see there is not a lot of incremental capacity that is coming, right? So whatever the demand is growing at 4%, 5%, there is not so much incremental growth in capacity, because there are no new players coming, only the existing players are expanding, and hence even that 4-5% growth is good enough growth for these existing players, especially when it comes to the wood pulp segment. Now, how to go about selecting companies to invest in this sector? And we will get slightly more detail in terms of raw materials and what it takes to run this business efficiently. So if you are a wood-based paper mill, then you have to make sure that you have access to pulp, wood pulp, which is the basic raw material in this case. And as you can see here, the pulp cost is approximately 30 to 35% of the net sales. And hence it is a major expense item for any paper manufacturing company. And if you have not secured your raw material, then you might get into a situation where you have to buy wood pulp at fairly high prices, while on the revenue side, the pricing you don't have much control upon, because that is ultimately the demand supply that decides the pricing on the revenue side. So you could get into a situation where you could be crushed in terms of margins, and this typically happens every 4 to 5 years, or maybe 6 to 7 years also in the paper industry. And so you have to be mindful of these cycles and invest accordingly. But fundamentally, it is very important that you secure your raw material before you go about even thinking of expansion, right? And this is the situation that has been. So if you look at all of these large players, JK Papers, West Coast, Tamil Nadu Papers, all of them have over the years increased their area under farm forestry, which means they themselves are doing a lot of tree farming, just to make sure that they have access to cheap raw pulp. Otherwise, in the global, if you go and buy raw pulp in the global market, it is very expensive. The second thing is water. The amount of water that paper consumes is significant. For example, it takes about 10 liters of water to produce a single A4 sheet of paper. So you can imagine how much water is required and in what volume to be able to manufacture millions of tons of paper. And this water is required across the paper cycle, right? So even if you have to grow trees, you need water. Even you have to make pulp, you need water. Even you have to bleach paper, you need water. And in large quantities, right? So, and hence this is one of the major barriers to entry. Not all companies can get access to water. In fact, for example, there are two companies, JK Paper and West Coast, which are one of the very few companies that have no issues sourcing water. Otherwise, for a company like Tamil Nadu Paper, it faces water scarcity every now and then. And if you look at the data, over the last 20 years, Tamil Nadu Paper has lost minimum 267 machine days due to water shortage. So they, basically come to a situation where there is no water, and hence the plant has to be shut down just because there is no water, right? And we as investors don't want to be invested in such companies which face water shortages very often. So, very basic, you need to make sure that your raw material availability is secure. So if you look at the chart here, this is the distribution of various large paper mills across the country. And you can see that they are clustered around raw material availability in terms of both wood pulp as well as water. And approximately 72% of the total installed capacity in India is concentrated in Andhra Pradesh, Gujarat, Odisha, Karnataka, Maharashtra, and West Bengal. So these are the major clusters where you will see majority of these paper mills. The third important component as far as the expenses are concerned is the power expense. So steam is required in huge quantities for paper manufacturing. And how do you create steam? You have large boilers. And how do you fire up these boilers? You need coal in huge quantities. Now paper industry is not a priority sector. So if Coal India were to allocate coal, it would first go and give it to power companies and then to paper manufacturing. So companies that have secured their raw material access in terms of availability of coal will see their costs being under control. Otherwise, you have to buy it through e-auctions, or you have to import coal from Indonesia and some of these other geographies. And this is the same problem that we saw in the cement industry video also, right? That coal being a raw material which is used as a captive raw material to generate power, is something that needs to be secured if you want to keep your costs under control. And this cost can be as high as 15% or maybe higher than 15% as well in case of paper manufacturing companies. So it's a significant cost. The other thing that I want to talk about is this thing called black liquor. So what happens is that when you are manufacturing paper from wood pulp, there's something called as an effluent called black liquor, and this black liquor can be used as a fuel to produce power. So only if you have captive power capacity can you use this back and to fire up the boilers, and in that way you can reduce your cost and improve the efficiency and all of that. So which is why all of these large wood based paper mills prefer to have their own captive power capacity, so that they are better able to reduce their costs, right? And that is one of the reasons why the wood based paper mills are very capital intensive, whereas on the other side the waste paper or the agro residue based paper mills are not that capital intensive, right? So the capability to use some of these effluents back into the system, reduce your costs, is something that will help reduce your expenses, help improve your margins. And which is why, to summarize, raw materials have to be secured, which is pulp, which is water, and which is power. So if a large wood based paper mill has these costs under control, then it's a good company to support. Of course, it has to also be supported by the whole paper industry cycle, but that's the kind of player you want to support when the cycle is in your favor. So this is just a summary of what we discussed. Obviously, when you are a very capital intensive industry, the whole idea is to have economies of scale and then high utilization. So as we saw, if the utilization falls down, the profit margins go down significantly, and that affects the whole industry. And it also becomes important what to avoid, right? So we discussed what to invest in, and that should also go along with what to avoid. So we avoid paper companies that take huge amount of leverage to expand their capacity, because in most situations, if they are very aggressive about expansion and their capital allocation is not that great, then they may fall into many problems. And this is one example, Ballarpur Industries, which at some point was the largest paper manufacturer in India. Now, BLT made significant debt financed investments to modernize and scale up their capacities, because of which they started seeing problems, and they also had to go through debt restructuring. So there's one large player, because of their poor capital allocation, had to even go through debt restructuring. So that is the kind of problem that you can get into if you're not serious about your capital allocation, if your raw material is not secured, if you have high operational costs, if you have low capacity utilization. And these are the companies that you would typically want to avoid when you are investing in paper manufacturing or the paper cycle. Now let us look at how to value a paper company, and so we'll also discuss valuation briefly, but this is a very indicative guide to valuation. What I'm trying to do here is basically discuss the range. Now, over the last couple of quarters, we've seen paper companies do well in India. So if you see the JK Paper, West Coast Paper, all of these companies have done well in terms of the stock performance. So the price, and just like we discussed in cement industry, there are two good indicators to track the valuation in this industry. One is EV to EBITDA and the other is price to earnings. EV to EBITDA is even better than price to earnings, because there is significant amount of debt involved as well, and enterprise value in some way or in basically captures the debt component as well. And so EV to EBITDA is a much better comparison metric than price to earnings. Now, different companies bases their capital allocation, bases their margin profile, trade at different, and also bases the kind of product mix that they have, right? So whether they are more into packaging, or they are more into copier business, or they are more into tissue paper business, could have different valuation. And there is no absolute number that I want to give out here in this video, but what I'm trying to say is that they trade at maximum single digit EV to EBITDA in most likely situation. Anything that is 7 or 8 times EV to EBITDA is already very expensive for this industry, right? For example, West Coast Paper is only trading at EV to EBITDA of about 4, and Shesa Sai Paper is only trading at about marginally upwards of 4.5. So that's the kind of range we are talking about. Anything beyond 7, 8 becomes very expensive, right? And that, in my view, is a time to sell. Now I will use and you can basically do that comparison similarly with the foreign companies as well. Their EV to EBITDA also sort of comes within the same range. Now let us look at the chart, and whenever I look at commodity plays, whenever I look at cyclical plays, I always look at the 5 to 10 year price to earnings chart. There's a very interesting quote by Kalpen Parekh, and I copy from one of his tweets on Twitter. He says one of the preconditions for a strategy to do well in the future is that its past should be very poor. Right now, now the recent past that we've seen in the paper industry has been very good, and so we certainly can't say that the recent past of paper industry has been bad. In fact, it's been good. All the paper companies have been doing well. They have posted best ever revenues and margins, right? And hence I believe the current valuations are already overvalued. Now let us look at the 5-year chart. We have three companies here. We have JK Paper, West Coast, and Shesasai. And this is the EV to EBITDA chart, 5-year EV to EBITDA chart of these three paper manufacturers. Now, as you can see, it's all of these three companies in terms of their EV to EBITDA are following the same trend. And the bottom was reached somewhere between March, April of 2020 when we saw the COVID. But after that, since then, we've seen the EV to EBITDA rise up to 10 for some of these companies. And then now it is trading somewhere around 4 to 5, in some cases 7 and 8 as well. I would prefer to buy a paper company below 4 in terms of the EV to EBITDA, and then sell it anywhere in the 7 to 8 range. That is the cyclical play that I would do. Obviously, this has to be supported by a strong fundamental reasoning as to why the revenues are expected to grow, why the margins are expected to grow, and this can also be sort of combined with a capacity utilization analysis, right? So if there is large amount of supply expected to come in the market, then you will probably see the utilizations going down, and that cycle will repeat. So once the utilization levels start going upwards of 90% and trending towards 100% plus, that is the time when I would take interest in the paper industry and invest in the cheapest stock, which is available at 4.5 times PE or less than that, and that will sort of determine my entry position. I exit when the valuation peaks out at 7.5, 8 times EV to EBITDA. This is my opinion. This is no way, by the way, investing advice. Please check with your investment advisor when you're investing. I'm just sort of laying down my thesis on how and when I would play the paper industry, and I hope this is helpful to you, and you can maybe take out some insights that can be helpful in your investing strategy also. But typically, if you don't have detailed understanding of cycle businesses, you should generally stay away. Otherwise, you could get into a situation where you could buy something in Jan 2018 at a price to EV to EBITDA of 8, and then wait for 4 good years for that valuation to come back up, right? So that you could fall into those kind of traps if you don't understand these cycles well, and it's fairly risky also to do cyclical investing. The only thing which is within our control as investors is the price at which we are buying these companies. So we have to be very conservative when you are taking any call, and wait for the right opportunity for the valuation in that business to fall down. And as this quote suggests, most likely situation is that whenever there is a lot of bad news around that sector, that is when the valuation will be at the lowest, and that is when you need to start buying these stocks, right? Not wait for a good news to come, not wait for better times to come, because by the time those good news starts flowing, the valuation has already gone up, right? So it's only when everybody is bad mouthing that sector that you need to start buying more and more of that sector. I mean, that's the cyclical play, and it takes some sort of courage to do that, and a lot of conviction to do that. But if you can start playing that game, then you can really make good money out of cyclical companies as well. Otherwise, it's not typically advised to do cyclical investing. You should stay away if you don't understand these cycles. So thanks a lot for watching this video. I hope this was helpful to you. I am available on Twitter at ukumar bacha. My email ID is ujjawal@wealthculture.in, and we have 2 live small cases at wealthculture.smallcase.com. There is an offer running. We are offering 20% discount on both of our portfolios. The code is WC20. And do not forget to please subscribe to our YouTube channel. It really helps us, if more and more people support us in this journey. And we are looking to do a lot of good content going forward as well. Thanks a lot and have a great investing journey. See you next time in the analysis of another industry.